Moody's Investor Services has assigned national scale ratings to 7 Nigerian banks. Insights into preparations to the U.S. general elections, plus Togo's economy expands at a healthy rate. It's the Friday edition of Business Incorporated. Many thanks for joining us. I am Bolaji Akiwale. Okay, let's get started with Moody's Investor Services saying that it has assigned national scale ratings to 7 Nigerian banks. The global rating agency assigned a 1.NG national scale local currency deposit rating to Sterling Bank. According to Moody's, the rating is the second highest of 3 national scale ratings corresponding to the bank's local currency deposits global scale ratings. Other banks that were assigned the national scale local currency deposit ratings include Zenith Bank, Guaranty Trust Bank, Access Bank, UBA, First Bank of Nigeria Limited, and the Bank of the Industry. This rating action, according to a statement from Moody's, follows the publication of new scale rating maps for Nigeria, Kenya, and Morocco, which provides a measure of relative credit worthiness within a single country and are derived from global scale ratings using country-specific maps. And it's 4 days to the U.S. general elections, and markets globally are becoming more feverish to the outcome of the vote. In Europe, stocks were lower in morning trade today following declines overnight on Wall Street. Now, joining us to take a look at how the markets in Europe are doing is DWTV financial correspondent Conrad Busen, who is live to us from the Frankfurt Stock Exchange. It's great to have you on the show, Conrad. Now, the stock markets in Europe opened lower, like I mentioned, and it seems nothing may really change until after the U.S. elections. Tell us how the numbers look like at the moment.
Well, the German share index DAX here in Frankfurt is down 0.8% at the moment. On a weekly scale, the market here is down more than 4%. And we are no exception here in Germany. In the United States, the S&P 500 index has had its longest losing streak since the year 2008, since the Lehman Brothers collapse. I think this illustrates quite impressively how nervous people are and how big the pre-election anxiety is on the financial markets. On the other hand, so-called safe haven investments are in demand. For example, German government bonds, which makes the yield on those bonds go down again. The average yield on all German government bonds, which only last week increased to the positive territory for the first time in 6 months, has plunged significantly below the zero line, so it has plunged to negative again.
The U.S. October non-farm payroll is expected out today, and this is to show how healthy the U.S. economy is prior to the elections. How will the markets react to it?
Well, Bulaji, it's expected that in the month of October, 173,000 new jobs were created in the United States. The unemployment rate is expected to sink to 4.9%. Only a very significant divergence of this would likely have a significant impact on the markets, because market people are seeing those labor market numbers in light of wage increases, inflation, and ultimately in light of the expected Federal Reserve decision in December, where it's expected that the Fed will increase interest rates in the US. So only if we see a significantly different outcome of the job numbers in the US, this might have an impact on the Federal Reserve scenario. Of course, with another regard, these job numbers today are also interesting because we have the upcoming election. Donald Trump, one of the candidates, often showed his disdain for official government statistics in the past. He might do so also today. He's constantly been claiming that he thinks the unemployment in the United States is actually higher than the unemployment rate suggests. If he does this today as well, of course this might have the potential to shudder the markets more.
Now, Conrad, we have more earnings released. Germany's second largest bank Commerzbank, automaker BMW, luxury watchmaker Richemont, and cement maker Lafarge all turned in their earnings, but the numbers were mixed. Talk to us about this.
Very mixed numbers and very mixed and different diverse reactions by the markets, as those numbers looked also very different. Commerzbank, for example, managed to increase its core capital ratio slightly to 11.8%. Still, that's not enough compared to other European banks. The shares are down today. BMW presented its best third quarter net profits in the history of the company, but BMW also announced that it's going to spend a lot of money on new technologies like electric cars, and this is something which sort of scares off a few investors today and makes them sell the shares. Holcim, the large cement maker, is not a very old company. The company was created after a merger of the two arch rivals Lafarge and Holcim last year, and after this merger a lot of cost cutting has been happening, a lot of synergy lifting, so the profits that Lafarge Holcim presented were much better than what analysts had predicted. The share is nicely up. And last but not least, Richemont, and admitted, Bulaji, you wanted to talk about this luxury goods maker shortly before the weekend. The numbers didn't look good, but after a profit warning last month, they were not a very negative surprise for the markets. On the contrary, investors are now hoping that Richemont, which is famous brands, Cartier, for example, Van Cleef, for example, will, just like other luxury goods makers, improve its business in China. Hermès, for example, and other luxury goods makers this week had reported that they are seeing a turnaround in China. And investors are betting on this, and that makes the share price of Richemont here in Frankfurt increase by 9% today.
Thank you so much, Conrad Busen, DWTV financial correspondent. And now to Asia, where the markets were broadly lower, with Japanese shares leading losses and the Australian benchmark index slipping to a 4-month low on worries about the U.S. elections. Japan's Nikkei 225 closed down 1.34% at 16,905, while the Topix index fell 1.56%, with shares coming under pressure from a stronger yen. Australia's benchmark ASX 200 closed down 44.75 points, declining for 5 consecutive sessions to end at a level not seen since late June. The energy sector slipped 0.9%, while the heavily weighted financial sector fell 1.60%. In Hong Kong, the Hang Seng was flat at 0.2%. The Shanghai Composite down 3.86 points, and the Shenzhen Composite was off by 0.21%. And U.S. stocks closed lower on Thursday, with information technology leading the decliners as concerns over the presidential elections lingered. Jill Malandrino is VOA business correspondent, and she joins us from New York. Jill, thank you for your time. Now, the U.S. elections is just days away, and traders are looking at ways to position the portfolios based on which candidate wins the presidency, with sectors and stocks to watch depending on who wins. What areas of the economy will benefit should Hillary Clinton become the next president?
Well, I just want to touch on the jobs numbers real quick as well. We got them at 8:30 New York time that just came in now. They came in relatively in line, and we're seeing that muted reaction in the futures market. So it looks as if the markets are taking this number in stride. But let's go back to what we think areas of the economy will benefit should Hillary Clinton become next president. There's 4 key areas that may react positively to a Clinton win. Let's start with alternative energy. She's made it clear that investing in clean energy and reduced reliance on fossil fuels is a key part of our environmental platform. Companies focused on alternative energy such as solar and wind power or clean energy infrastructure stand to do well. The next sector is emerging markets. Just look at the Mexican peso reaction when Clinton performed well during the debates. It soared in the overnight market, so she would most likely continue on the current administration's international trade path. The president can act unilaterally on trade in the interest of national security, so it's unclear whether Trump would act on that or not.
Now, interestingly, Clinton has been campaigning on cutting costs in healthcare, but the third area you see benefiting is actually a subsector in healthcare.
That's right. Healthcare providers, hospitals, treatment centers, and insurers would do well as she would look to strengthen the Affordable Care Act, or what's commonly referred to as Obamacare. Lab companies and diagnostic testing equipment makers may perform better as well. Now, note, this is different from the other subsectors of healthcare like big pharma and biotech, which she's been aggressive about cracking down exorbitant costs, as you had mentioned before. Now, the fourth area to benefit is the multinational stocks with international exposure like General Electric, Caterpillar, and UTX. These companies should also outperform with the Trump win as well.
Now let's talk about Trump and compare how a win for him would impact sectors and stocks.
Now, biotech and pharma, which would most likely suffer under a Clinton win, would be better under Trump because he wants to repeal Obamacare and re-importation from other countries. But controlling drug prices is unlikely to be a priority for him. In general, he is for deregulation across the board. Energy is another sector that will do well with deregulation. Trump has promised less regulation on drilling and expansion of drilling. The segment of the industrial sector that service the energy sector that would benefit are like GE and Baker Hughes. That was a deal that was just announced this Monday. Also Schlumberger and Halliburton. Same thing with financials. Banks are likely to do better under Trump. He has indicated he would like to roll back financial regulations, including the Dodd-Frank financial crisis legislation that Clinton has pledged to strengthen. Both candidates support increased infrastructure spending. Under a Trump administration, while restrictive trade policy may constrain overseas revenue for multinationals, those same companies like the GE, UTX, Caterpillar, many industrial companies would benefit from increased infrastructure spending. Finally, one of Trump's biggest campaign issues is repatriation of overseas cash from companies like Apple and pharmaceutical companies that have set up operations overseas in countries like Ireland, for example, because of the less complicated tax codes. Expect tax reforms to be priority one for Trump.
Now, more broadly speaking, how well do you think the markets will digest a new commander-in-chief?
An increase in stock market volatility ahead of and immediately following the election is starting to play out now, following Friday's surprise with the FBI reopening its investigation into Hillary Clinton's email. The S&P 500 on that Friday dropped 0.5% to ultimately recover most losses by the market close. I think that's the type of reaction we will see next week in terms of short-term impact, much like we saw with Brexit back in June. Regardless of the outcome, several analysts do not expect a major election-related long-term market disruption for several reasons. Most notably, the stock market historically has performed well around elections as policy uncertainty is resolved.
Now, Jill, just before I let you go, in terms of stock-specific news, what is the outlook for holiday shop and spend trends now that we are in the home stretch for 2016?
The National Federation expects retail sales in the U.S. for November and December, that's excluding autos, gas, and restaurants, to increase a solid 3.6% to about $655 billion. Online sales are forecast to increase 7 to 10%.
All right, thank you so much, Jill Malandrino, VOA business correspondent reporting from New York. We'll go on a break. And when Business Incorporated returns, we'll be talking about development in some African countries. Please stay with us.